Hello traders, Gary Wagner here just before 12 o'clock in Honolulu, 6 o'clock in New York. It is Thursday, October the 12th, 2017, and this is the Daily Report for Gold and Silver. Nice showing in the precious metals markets with both gold and silver trading higher on the day. Gold closing up about $7 at $12.95. The interesting thing in today's action was the high, which came in at $12.99.80. Within 20 cents striking range of that elusive $1,300. Silver up about 13 cents on the day, closing at $17.27, and fractionally higher move in the dollar index, 92.89, up 7 points on the day. A nice showing today with gold prices trading moderately higher, currently up $7 at $12.95.90. Now, what is of interest to me is the intraday high today, which came in at $12.99.80. So as we can see, we came in within really striking distance of $1,300 an ounce, only to see the market back off of those intraday highs as we went into the close. In my opinion, it is not a matter of if, but when gold prices will breach back above 1,300. First of all, and secondly, even with that resistance, what is most clear to me is when we look at the market's defined move to the downside and this key reversal that has been exhibited over the last couple of days, we can say with some clarity that in fact we have seen the correction conclude and we are now back within rally mode. Now traders, in terms of my current upside target and exit strategy, what I'm looking at is as follows. First, we need to see obviously this market move above 1,300 and close above 1,300. From then, we have very, very minor resistance at 1,309, and the next real level that I want to look at is going to be the area between 1,322 and 1,325. It's a 38 and a 23% retracement point, although the important retracement point that we absolutely want to follow is the one that's further out to the left. It's these here because they account for the entire scope of the most recent rally. And so traders, we are currently long, of course, at 87. Market is at 96 if we round it up by 10 cents. But our stop is rather low because when we initially put the stop in, we put it into account for the lowest low that came in, and we entered right in this area here. And so because of that, in terms of stop placement targets or territories, I have two basic models that I'm considering. The first one is to let gold prices move effectively above 1,300 and close above 1,300. And then at that point, we look to trail our stop just below that price point, around 1,290. The other technique would be simply to look at where the market traded to, and you can go back 3 days, and by doing that, we would move our stop below the low of this candle here, 1284. And traders, depending on the activity tomorrow, if we see a solid break and close above 1,300, we'll be able to put our stop up a little bit higher. If the market still kind of lingers in this area, my suggestion and my belief is going to be to move our stop right to the area of 1284 and put it just below that. That's to account for this particular low. So my recommendation is to maintain your current long position and to look to move your stops higher either later on today or tomorrow. Traders, one of the focuses of our report today was to talk about our stop, where it currently is, and where we should move it. Based upon recent action and depending on what we see tomorrow, we will look to raise our stops either later on today or tomorrow. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.